right, so get this. Today's deep dive might just change how you think about insurance. We're going deep into how this industry, which you might think of as all about numbers and policies, is actually becoming a force for positive change on a global scale.
Interesting.
Yeah, you heard that right.
Wow.
Insurance tackling things like climate change and social justice.
I mean, it might seem surprising, but when you think about it, insurance has always been about managing risk.
Right.
And the risks we face today are evolving dramatically. Climate change, pandemics, social unrest. These are all interconnected challenges that demand a new approach.
So that's where our source material for this deep dive comes in. An article titled Reimagining Risk: How the Principles for Sustainable Insurance Are Reshaping the Global ESG Agenda. It's packed with insights about how insurance is stepping up to address these massive issues.
Wow.
But before we jump in, I've heard a lot about ESG lately. Is this PSI thing just another framework?
Or is there something unique here?
That's a great question, and you're right to point out the alphabet soup of sustainability frameworks out there.
Right.
What's interesting about the Principles for Sustainable Insurance, or PSI, is that they're specifically tailored to the unique challenges and opportunities within the insurance industry.
Interesting.
They go beyond simply checking ESG boxes. And really get to the heart of how insurers can use their influence to drive positive change.
So it's not just about avoiding bad press or appealing to eco-conscious consumers. There's some real substance here.
Absolutely. In fact, the article highlights how aligning with the PSI is becoming essential for insurers to stay competitive.
Really?
Investors are increasingly scrutinizing ESG performance. Regulators are introducing stricter requirements. And even customers are demanding more sustainable options.
So it sounds like insurers are realizing that sustainability isn't just a nice to have. It's a must-have for long-term success.
Precisely.
And the article argues that this shift is being driven not only by external pressures, but also by a growing understanding within the industry that embracing ESG principles can unlock new markets and create real value.
That makes sense if insurers can identify and manage emerging risks like those related to climate change. They can potentially mitigate losses and even create new products and services to address those risks.
Exactly. And it goes beyond just risk mitigation. By incorporating ESG considerations into their investment decisions. For example, insurers can direct capital towards sustainable projects and initiatives. That can generate both financial returns and positive social and environmental impact.
So instead of just reacting to events after they happen, insurers are becoming proactive forces shaping a more sustainable future.
It's about recognizing that insurance has a crucial role to play in building a more resilient world.
Wow.
And the PSI provides a roadmap for how to do that.
Let's dive into that roadmap. The article breaks down the PSI into 4 key pillars. First up, embedding ESG in decision-making. This seems pretty straightforward. Basically considering environmental, social, and governance factors in all aspects of the business. But I'm curious, beyond the obvious things like reducing their own carbon footprint, how are insurers actually putting this into practice?
It's definitely more than just window dressing. We're seeing insurers integrate ESG factors into their underwriting processes, for instance. This means they're assessing the environmental and social risks associated with the projects and businesses they're insuring. So a company with poor environmental practices or a history of human rights violations might face higher premiums or even be denied coverage altogether.
Wow, that's a pretty powerful lever to encourage businesses to clean up their act.
It is, and it goes beyond just individual companies. We're also seeing insurers factor ESG considerations into their investment portfolios. So instead of pouring money into fossil fuel companies, for example, they're investing in renewable energy projects or companies with strong social responsibility track records.
So they're using their financial clout to drive capital towards sustainable investments. It sounds like this could have a ripple effect throughout the economy.
Absolutely. And this ties into the second pillar of the PSI. Raising awareness and reducing risk. Insurers are in a unique position to educate their clients and the public about emerging risks, particularly those related to climate change. They have access to vast amounts of data and expertise that can help people understand the potential impacts of these risks and take steps to mitigate them.
So it's not just about protecting people financially. It's also about empowering them with knowledge and resources to build more resilient communities.
Exactly. And this goes hand in hand with the third pillar of the PSI.
Okay.
Wider collaboration for systemic change.
Okay.
The challenges we're facing, climate change, social inequality, are complex and interconnected.
Right.
No single company or sector can solve them alone.
Yeah.
Insurers are recognizing that they need to work collaboratively with governments, NGOs, and other businesses to drive systemic change.
I imagine this involves things like partnering with organizations to develop innovative solutions, advocating for policy changes, and sharing knowledge and best practices.
You got it.
Yeah, okay.
Take, for instance, the growing field of microinsurance. Insurers are collaborating with NGOs and development agencies to design and distribute affordable insurance products.
Right.
Specifically for low-income communities that are particularly vulnerable to climate-related risks like floods or droughts.
That's a great example of how insurance can be a tool for social good, helping to build resilience and protect the most vulnerable populations. But all this collaboration innovation sounds great in theory.
Yeah.
But how do we ensure that it's actually making a difference? That's where the fourth pillar comes in, right?
Exactly.
Accountability and reporting. Okay.
The PSI stresses the importance of transparency and accountability. Insurers need to be upfront about their ESG commitments and track their progress toward meeting those goals. This involves developing clear metrics for measuring their social and environmental impact.
Okay.
And reporting that information to stakeholders in a transparent and accessible way.
So it's not enough to just talk the talk.
Right.
They need to walk the walk and show concrete evidence of their impact.
Exactly.
But honestly, how do we know that this isn't just greenwashing? Are there real financial incentives for insurers to go all in on ESG?
That's a valid question. And the article delves into some of the financial motivations behind this shift.
Okay.
While regulatory pressure and reputation concerns are certainly factors.
Right.
There's a growing body of evidence suggesting that companies with strong ESG performance tend to outperform their peers in the long run. They're better able to manage risks, attract and retain talent, and build trust with customers and investors.
So ESG is not just about doing good, it's also about doing well.
Precisely. And this recognition is driving a fundamental shift in how insurers approach their business.
Okay.
They're realizing that sustainability is no longer just a compliance issue.
Yeah.
It's a strategic imperative for long-term success.
This is where it gets really interesting for me, because if insurers are starting to see ESG as a pathway to profitability, that means they're more likely to invest in innovation and develop new products and services that benefit both their bottom line and the world around us.
Absolutely. And we're already seeing evidence of this.
Oh, really?
For instance, there's a growing trend of insurers offering discounts on premiums for homes with energy-efficient features.
Okay.
Or for drivers who use electric vehicles.
So by aligning their financial incentive with sustainability goals, they're creating a win-win situation for themselves and their customers.
Exactly.
I'm starting to see how this could really create a ripple effect across the entire economy.
Absolutely. And it's important to remember that this is still a relatively new and evolving space.
Right.
There are challenges to overcome, but the momentum behind sustainable insurance is undeniable.
Yeah.
More and more insurers are recognizing that this is not just a trend, it's the future of their industry.
I'm definitely starting to see that too, and I'm curious to learn more about the specific companies and initiatives leading the way in this space. That's where we'll pick up in the next part of our deep dive, so stay tuned.
Yeah, good.
All right, so we've established that sustainable insurance is more than just a buzzword.
Right.
It's a fundamental shift in how the industry is approaching risk and responsibility. But let's get specific. Who's actually driving this change? And what are some real-world examples of sustainable insurance in action?
Well, one of the key players in this space is the United Nations Environment Program Finance Initiative, or UNEPFI.
UNEPFI.
Yeah.
Okay.
I'm not super familiar with them.
They're a partnership between the UN Environment Program and the global financial sector.
And they've been instrumental in promoting sustainable finance across the board.
Got it.
In the context of insurance, they're the driving force behind the PSI. Providing guidance and resources to insurers looking to implement those principles.
So they're kind of like the coaches helping insurers navigate this new terrain.
Exactly. They offer training programs, develop tools and frameworks, and facilitate knowledge sharing among industry leaders.
Okay.
But they also go beyond that, advocating for policy changes that support sustainable insurance practices.
Interesting.
For example, they've been pushing for mandatory climate risk disclosure requirements for companies.
That makes sense if companies aren't required to disclose their climate risks.
Right.
It's hard to hold them accountable or make informed investment decisions.
Exactly.
It sounds like transparency is a big part of this whole movement.
It's absolutely crucial.
Yeah.
And Unit PFI is also working to build consensus on key issues.
Okay.
And foster collaboration within the industry. They convene global summits and forums where insurers, investors, policymakers, and other stakeholders can come together to discuss challenges,
right,
share best practices, and work on solutions.
So it's not just about individual companies going it alone. It's about creating a collective movement towards a more sustainable future.
Precisely. It's about recognizing that we're all in this together.
Yeah.
And that collaboration is key to tackling these complex challenges.
But beyond these large organizations, we're seeing individual companies step up and really walk the walk when it comes to sustainable insurance.
Yeah.
All right, give me some names.
Okay.
Who are the real leaders in this space?
There are quite a few, actually, and they range from global giants to smaller niche players. One company that's often cited as a leader is Swiss Re, a major reinsurance firm.
Swiss Re? Yeah, I've heard of them. They're one of the biggest players in the game, right?
They are, and they've been at the forefront of integrating ESG factors into their business for quite some time now.
Okay.
They were one of the first signatories to the PSI back in 2012.
Wow.
And they've been actively involved in shaping the sustainable insurance agenda ever since.
So what are they doing specifically? How are they putting these principles into action?
Well, one area where they've been particularly active is climate change.
Uh-huh.
They've developed sophisticated models to assess climate risks.
Okay.
And they're working with clients to help them mitigate those risks.
Got it.
They're also investing heavily in renewable energy and green infrastructure projects.
So not only are they reducing their own environmental footprint,
right,
but they're also helping to accelerate the transition to a low-carbon economy.
Exactly. Another example is AXA, a multinational insurance firm based in France.
AXA. Okay.
They've made a strong commitment to divesting from fossil fuels and investing in green bonds. They're also working to promote sustainable mobility by offering incentives for customers who use electric vehicles or public transportation.
Okay, so they're thinking about the bigger picture, how their products and services can contribute to a more sustainable society.
Right, and they're not just focused on climate change either.
Okay.
They're actively addressing social issues like gender equality and financial inclusion.
That's great to hear. It seems like there's a growing recognition that sustainability is not just about the environment. It's about creating a more just and equitable society for everyone.
Absolutely. And we're seeing more and more insurers incorporate these social dimensions into their ESG strategies.
Yeah.
For example, some companies are developing microinsurance products specifically designed for low-income communities, providing affordable access to essential financial protection.
That's a great example of how insurance can be used as a tool for social good.
Yeah.
Helping to build resilience and protect the most vulnerable populations.
It is, and it highlights how interconnected these social and environmental issues really are.
Right.
For instance, climate change disproportionately impacts vulnerable communities who often lack the resources to adapt. By addressing these issues holistically, insurers can help create a more resilient and equitable society for all.
So it's not just about ticking boxes and meeting regulatory requirements. It's about fundamentally changing the way we think about risk and how we can use insurance as a force for good.
Exactly. It's about reimagining the role of insurance in society.
Wow.
And embracing the opportunity to create a more sustainable and resilient future. But let's be real. There are still challenges to overcome.
Okay, let's talk about those challenges.
Okay.
We touched on data gaps and regulatory hurdles earlier, but what are some of the other roadblocks standing in the way of widespread adoption of sustainable insurance practices?
One of the biggest challenges is simply changing mindsets. The insurance industry has traditionally been very risk-averse and focused on short-term profits. Shifting to a long-term, sustainability-focused approach requires a fundamental shift in thinking.
That makes sense. It's like trying to turn a giant ship around.
Right.
It takes time and effort to change course.
Exactly. And then there's the issue of capacity building. Many insurers simply don't have the expertise or resources to fully integrate ESG factors into their operations. They need access to training tools and data to effectively assess and manage sustainability risks and opportunities.
So it's not just about willingness.
Right.
It's also about having the tools and knowledge to actually make it happen.
Exactly.
I imagine that's especially true for smaller insurance companies that might not have the same resources as the big players.
That's right. And then there's the challenge of measuring impact.
Okay.
It can be difficult to quantify the social and environmental benefits of sustainable insurance practices. This can make it harder to justify investments and demonstrate the value of these initiatives to stakeholders.
So it's not always easy to draw a straight line between sustainability efforts and bottom-line results.
Exactly. And this can be a barrier for some companies who are primarily driven by short-term financial gains.
Right.
But as we're seeing more and more, the long-term benefits of sustainable insurance are undeniable. Companies who embrace ESG principles are not only mitigating risks and building resilience, but they're also attracting investors, winning over customers, and attracting top talent.
It sounds like sustainability is becoming less of a nice-to-have and more of a need-to-have for businesses to thrive in the long run.
Right.
But how does all of this affect the average person who's just trying to navigate the complexities of insurance in their own life?
That's a great question, and one we'll dive into in the final part of our deep dive, so stay tuned.
All right, so we've explored the big picture of sustainable insurance, the principles, the players, the challenges.
Right.
But let's bring it down to earth.
Okay.
How does all of this impact the average person who's just trying to make sense of insurance in their own life?
This is where things get really interesting, because while these huge industry shifts are happening, individual consumers have more power than they might realize to influence the direction things go.
Okay. I'm all ears. What kind of power are we talking about? It's not like we're negotiating international treaties here.
True. But your choices as a consumer actually matter.
Okay.
The first thing you could do is simply be aware, ask questions when you're shopping for insurance.
Right.
Don't hesitate to inquire about a company's ESG commitments.
Okay.
Do they invest in fossil fuels? What are their policies on underwriting businesses with questionable social or environmental practices?
So basically, don't just blindly accept whatever policy is offered.
Right.
Do some digging.
Yeah.
See if the company's values align with your own.
Exactly. And remember, you're not alone.
Okay.
Consumer demand is a huge driver of change. The more people who ask these questions, the more insurers will realize that sustainability matters to their customers.
It's like voting with your wallet, right? Supporting the companies that are doing the right thing.
Precisely. And there are resources out there to help you make informed choices.
Oh, really?
There are websites and organizations that rank insurers based on their ESG performance, so you don't have to do all the research yourself.
That's incredibly helpful. It's like having a sustainability cheat sheet for your insurance decisions.
Right.
But beyond just choosing the right company, are there other things we can do as individuals to promote this movement?
Absolutely. You can advocate for change.
Okay.
Talk to your insurance broker. Write to your elected officials. Spread the word on social media.
Yeah.
The more we amplify the message that sustainable insurance matters, the faster this transformation will happen.
So it's about using our voices and making it clear that we care about these issues.
Right. And you can also explore options beyond traditional insurance products.
Okay. There's
a growing market for innovative solutions that specifically address sustainability concerns. For example, some companies offer discounts for homes with energy-efficient features or for drivers who use electric vehicles.
So it's not just about choosing the right company. It's also about choosing the right products that align with your sustainability goals.
Exactly. And the beauty of this is that it creates a positive feedback loop. The more people who demand these sustainable products, the more companies will invest in developing them.
It's a win-win for everyone.
Right.
Consumers get the coverage they need while supporting companies that are making a positive impact.
Exactly.
Okay.
And as we wrap up this deep dive, I'm going to leave you with this thought.
Okay.
Sustainable insurance isn't just a trend. It's a fundamental shift in how we think about risk and responsibility. It's about recognizing that we're all interconnected and that our individual choices can have a ripple effect on the world around us.
So the next time you think about insurance, don't just think about protecting yourself from financial loss.
Right.
Think about the bigger picture, the kind of world you want to live in, and how your insurance choices can help create that world.
Well said. That's a heart of sustainable insurance.
Yeah.
And it's a journey we're all on together.
And on that note, we wrap up our deep dive into the world of sustainable insurance.
Great.
We hope you found it insightful, maybe even inspiring. Remember, knowledge is power. And the more informed we are as consumers, the more we can drive positive change.
Absolutely.
Until next time, stay curious, stay engaged, and stay tuned for more deep dives into the topics that matter.